Coming up in this show, I'm going to bring you my comments on the markets. Harvey has a trade idea, and he's going to show you analysis and the trading approach to the consumer staples XLP. Katie is going to bring trade planning with options, analysis, and an option strategy in DraftKings. I'll show you my analysis on the stock market, the S&P 500, and a minor revision on our targets in price and time, and the importance of the 2-hour intraday analysis.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go Ashley.
Hi, I'm Steve Miller. Call me Slim, and this is the Slim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market eased lower the first half of the week, looking very tired. But investors woke up startled out of their slumber on NVIDIA earnings, which came Wednesday afternoon. Wednesday was an eventful day as the Fed minutes came out, and they said they're not in a hurry to cut rates, pretty much in line with what my thinking has been. And there was a brief downtick following that news, but short covering came in the last hour on Wednesday, anticipating the NVIDIA earnings coming out. They were expected to be good, but these were fantastic, and revenues were up 265%. On Thursday, that ignited a huge rally. NVIDIA was up over 120 points, the Nasdaq gaining 3%, and the S&P 500 up 2%. That was up about 100 points for the SPX. Analysts, they're all over it. They've been raising their targets to $950 to $1,000 on NVIDIA stock. And comments from NVIDIA were ebullient. They say there's a whole new industry that has been created. This, of course, helps the techs all across the board, as they say that sovereign AI is going to be huge. That means that the sovereigns, all of the countries out there, are going to need to put in AI that fits with their own countries and their own cultures, and that is an absolutely massive build-out. Of course, that is fantastic for companies like NVIDIA that supply the engines to do that. Suddenly, NVIDIA is not looking that expensive, with right now a PE of 65 and maybe a forward PE that's now in the 30s. That doesn't even look that expensive, does it? But the indexes are very expensive. And when you look at stocks like Meta, up near 500, well, a stock like that, a PE in the mid-30s, is pretty nutty. Investors, well, they see the potential for future monetization, but I don't actually, as AI is going to be, monetization in AI, especially for companies like Meta, is going to be tough to come by. The implementation of that is going to be very expensive. So I think Meta at 500 is a screaming sale. But I was wrong about Meta in the beginning of the year because I thought it would be one of the worst stocks for the year. And I'm not afraid to say it when I'm wrong. But that PE that we see in Meta, it's dwarfed by PEs and other stocks that are benefiting from AI. AMD, over 300 PE. Palantir, over 260. I mean, that's a lot baked in the cake. And those stocks are going to have a hard time moving forward, even if earnings do begin to pick up. Friday, there was continued buying here in the S&P 500. It gained pretty strongly early in the morning, and the Nasdaq also, as we saw NVIDIA again moving to the upside. But then the market started to get tired again and got a little bit sloppy here in midday as I do this show. The stock market is in a tough area of resistance. Well, I've said that, and I put a question mark on that because the market has been able to surpass every single resistance that we have seen based on the fact that it's been led up by these AI stocks. The target that we've had for the year, which was around 50-50 and an outside chance at 5,100 on the S&P 500, has been already touched. And we didn't expect that to happen until Q3 of this year. Yes, we thought this would be another bull market year. And that, of course, doesn't change, but we get forced to look at higher targets when the market does this well. And while I absolutely respect what looks like a structural change to the indexes related to the realities of building out AI, the rubber band is very stretched. This week we published a very important video sharing our analysis and timing for a correction. Now that's slightly changed from what our original analysis was, and you can see that on YouTube. This is a spectacular video where I show charts that I have never shown before. And we put that up on YouTube so that people can see the unbelievable level of work that we provide. And overall, while our targets have been reached, the timing for the intermediate to longer term has not changed. We continue to look for a sizable correction into spring. And you can see that in that video we published. And then higher levels later in the year. That has not changed, so our timing remains the same. This week so far, well, the indexes, they're mixed. The NASDAQ clearly is up, about 2 3/4 points to the upside right now at midday. S&P 500 up just under 2%. The Dow up about 1%, and the Russell down about 1%. So the small cap stocks, they have not kept up with this at all. Bond market, unchanged on the week, really. The 10s trading about 4.3%. Our upside target, when they were down at around 3.8%, was getting up to about 4.25 to 4.4%. Outside 4.5%, that really hasn't changed. The gold market up about $11, and we see several more weeks of chop ahead coming before a much more favorable period. Dollar loses 0.3%. It is in resistance, and we think it's going to move down into May. And the oil market loses about $1, and we think the next 3 to 5 weeks are going to see considerable downside. Now that analysis on bonds, gold, the dollar, you could see that in that special report that we put up on YouTube with that very unusual analysis. And I think you're going to think it is, well, phenomenal. So do go to YouTube, to our website, at Ask Slim Team. That's our channel, and you'll be able to see that video. And for our members, it is posted in the video section under Tools for Techs, and you can refer to it over there also. That is for members level 2, 3, and 4. All right, so let's move forward here. That is my opening comments for the week. You can learn more at AskSlim.com. Just go to the website. You want to get acquainted, sign up for free. Take that Snapshot Lite. You'll be able to sign up right there, no credit card, right on the front page of the website, and you'll be getting information from us every day with Matt's analysis on the S&P 500. That's daily for free. On YouTube, subscribe to our channel at Ask Slim Team. Amazing the stuff we put out there. Click the notification bell and you'll know when we put videos up. And like this video, give it a thumbs up. And on X, follow us at Ask Slim. Questions on anything I present here, anything on our analysis and education, write to Matt at AskSlim.com. Trade ideas. Arvi does this all the time for our members, level 3, level 4, and then we share it once in a while out over here so you get a good idea. It's usually a couple days later that we put this out here, but doesn't matter because you're going to learn this amazing analytical method from an expert. Arvi is one of the experts in the world on cycle analysis, especially our version of that. So Arvi's going to show you XLP.
This is an Ask Slim trade idea video walkthrough for a short-term long in the SPDR Consumer Staples ETF or the XLP. Keep in mind all of our trade ideas are available for level 3 and 4 members at AskSlim.com. So if you're interested in signing up for a membership, please go to aslim.com and click on membership options. If we go ahead and jump over here to the weekly and daily cycle analysis for the XLP, you'll see on the weekly chart, just give this 1 second to load here. We are in an intermediate term rising phase coming off of a higher low basing cycle right there with that higher cycle low versus that old low. And we are in right now a very positive rising phase. Given that we have now moved through this old high here at 74.48, it opens the door to this zone right here from 75.89 to right around 77.45. Our next low is due 325 to right around 5.6. If we jump over to the daily time frame, you will see a nice move here in the staples. We did participate on the long side in this move right here in our most recent trade idea. Now you can see we have a firmly uptrending slim ribbon. So we are just looking for small downticks into that rising slim ribbon to act as minor support and look for this to turn right back up on the upside here in the XLP. So these zones are rising, but currently they are at 73.76 to 73.22. If this were to close on a daily basis below the 78.6 fib at 72.84, that would render this idea no longer valid. And we are looking for a move through the 78.6 to the 100 on the upside, 75.78 to 76.72. The overall risk on this trade idea is right around 90 cents, and we're looking for a move of at least 199 or so here on the upside in the XLP. So a quite favorable risk versus reward on this trade idea. Again, as I said earlier, if you're interested in seeing more of our trade ideas and seeing our process in action, please go ahead and sign up for a level 3 or 4 membership at aslim.com. If you have any questions, feel free to reach out. Thanks again, and have a great day.
This is Trade Planning with Options. Katie is going to also demonstrate cycle analysis in DraftKings, and she's going to be applying our analysis to option strategies. Nowhere else in the world can you see our analysis and how to apply that in option strategies, and Katie is truly an expert in both as she presents to you on the Tasty Trade platform. And please do open an account through our website on Tasty Trade, and she's going to show you how to do that. So, Katie, take it away.
Hi, this is Katie with Ask Slim. This is Trade Planning with Options on February 22nd, 2024. Today we're going to look at an options trade idea in DraftKings. First, we have our legal disclaimer, the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the Ask Slim website or email matt@askslim.com. Let's get started. Today we're going to look at an options trade idea in DraftKings, ticker symbol DKNG. So for those of you who are unfamiliar with this company, it is a sports betting company in the consumer cyclical sector. First, looking at the weekly chart, we have a 28-bar average cycle length, and we are 7 weeks off the prior cycle low, so still in the rising phase. Last week, DraftKings made it up to the 100% fib extension, and backing off this week as we get into the daily cycle timing period, which I'll show you momentarily when we look at the daily chart. Our proprietary momentum indicator, the reversal scout, this green and purple ribbon, turned green a couple weeks after the prior cycle low. That helps us to confirm the low, and it currently remains positive. Our next weekly cycle timing window isn't until out in late summer. Let's switch over to the daily chart. Here on the daily chart, we have relatively long 41-bar cycles, and you can see that DraftKings has entered a daily cycle timing window represented by these blue vertical dashed lines. It runs from today through March 1st. So this is the period of time when we expect the current cycle to form a low and then turn up into the rising phase of the next cycle. As of today, DraftKings is trading just at the top of this support zone. The support zone runs from 40.41 on the top to 37.19 on the bottom. In terms of momentum, the reversal scout has turned negative. Notice how that happened just after the cycle peak formed. Our slim ribbon, which colors the candles red, green, or gray, depending on momentum conditions, is still green, but it may go neutral as we go through this bottoming phase. I'd also like to show you an area chart because that's where I have the option bias indicator, the OBI. This is sitting at a P3 right now, suggesting positive option biases. Now, in terms of an entry signal, we can use the slim ribbon PO for an upside momentum continuation signal like we got right back here. And we can also use the momentum on the 2-hour chart, which is currently negative. We would wait for that to return to positive. Personally, I like to use both the 2-hour momentum and the slim ribbon PO. Now, going back to the daily chart here, if during this bottoming phase, DraftKings were to close below this support zone, then that would invalidate the trade idea. Now we're going to go over to the tastytrade platform. They are our preferred options trading platform. If you're interested in them, you can go to the Ask Slim homepage, hover over the Marketing Partners tab, and click on tastytrade. That will take you to this page where you can learn more about them. And if you choose to open an account with them through our link here, that will help you with a special bonus, and it will also help us. Now over to tastytrade. Here is DraftKings loaded in, ticker symbol DKNG. Notice that the IV rank is relatively low at 10.5. This suggests a long premium trade. Now I'm going out into the April monthly expiration cycle. It currently has 57 days to go, but it will be closer to that classic 50 days to expiration by the time we get our entry signal. You could also use one of these weekly expiration cycles if you prefer that. Now, as far as strategies go, DraftKings is relatively inexpensive, so you could simply purchase a call. I like to go to approximately the 70 delta, and right now that is about the 37 call. So remember that the 70 delta strike might be different at the time of the entry signal. So if we were entering right now, this call would cost us $5.20 in debit, $520. That would be our max loss, and we would have unlimited profit potential. One of the disadvantages of buying options is that you are purchasing extrinsic value. $142 in extrinsic value in this case. It's obviously moving around. Anyway, that will begin to evaporate from your option the longer that you hold it. So I like to eliminate that issue by doing a zebra. To set that up, you would purchase 2 of these calls. So let me increase the quantity. And now let's look at the extrinsic value. 282 it says. So we're going to sell the call that has closest to that amount of extrinsic value. I have extrinsic value set up in this column right here, and you can see that 276 is closest to 282. So we are going to sell that 41 call and just one of those. So now you can see that we are only buying $4 of extrinsic value. So of course this is a little more expensive. We have to pay $764. Again, that's our max loss. Our max profit is still unlimited, but because we get more long deltas with this strategy than just buying a call, we earn more closely one-to-one with the stock price. Here is the risk graph. So I will update the options trade idea tracker with these 2 strategies, and I will post on the Discord channel when they get activated by an entry signal. And I will also post on both of those if the strikes are different at that time. That is our options trade idea today. And As always, you can feel free to reach out on Discord or via email to katie@askslim.com if you have questions or feedback.
Stock market analysis and projections on the S&P 500. Some important information that you need to read. This is about our approach to the market and about you and how you use the information that we provide. And the real key thing is about trade ownership. You see what we do, what any professionals show you, you need to take ownership of the trade because nobody's going to help you get out of it, and you need to know how to manage your own risk. So really important. Please do read this page. This is amazing. I am putting on a workshop this Monday, February 26th, and that'll be at 2 p.m. Eastern Time. And what I do is go through all of my analysis. You'll see my analytical approach on 24 different futures and indexes. It's about 50 charts. And I'm going to teach it out loud. As I do my own work, you're going to be able to watch me do it. And I'll talk about my whole thought process on all of this. And these are what I do on my weekly analysis, and we supply this to our members. Level 4 gets our live charts, and level 3, level 2, they get to see these in different variations. But I teach on this once a month special workshop that we have. If you want to participate, there's limited attendance, and you'll be able to watch me do this work and learn as I teach cycle analysis. You want to participate? There is a fee. Write to Matt@askslim.com, and he will let you know if the space is available, or maybe you'll be on the waiting list for the next one. But please do write to Matt@askslim.com for the information on Behind the Cycle Analysis Curtain. I'm really proud to bring this work. Okay, stock market analysis on the S&P 500. I'm going to look at the weekly, daily, and 2-hour charts. If you want to see our full analysis on all the indexes, you can actually get our charts in static form with Matt's commentary in the SIR Daily for level 1. So please do sign up for level 1. It's not expensive at all. It's $45 for 3 months. So please sign up for that, and you're going to get our information on all of the indexes that we do. So please consider that and go to our website, askslim.com. All right, let's switch over to the analysis as I look at the chart of the S&P 500. So this is the S&P 500 SPX, and on the left is the weekly, and on the right is the daily. If you're brand new, this is cycle analysis. So we are one of the few websites out there that present cycle analysis. Our team is expert in this type of analysis, and you can learn more by going to our website. Go to the workshop tab, click on Cycle Analysis Workshop, and there's a free video on there. It tells you all about that, and I think you'll find that very interesting. Let's open up the weekly analysis in here. And there is a slight change. I talked in the beginning of the show that I had put out a special video this week which explains the slight lengthening out in the cycle patterns that I have here. You got to watch that. It's a Tools for Text for video that we posted up on YouTube for free, which is very rare for us to do that because we thought that the value was so good and that we wanted you to get exposed to the work that we do. A very unique charts that you'll see there I have never shown before, so please do go see that in our YouTube channel at AskSlim Team, and you're going to find that information, well, mind-boggling. Let's take a look here at what's going on. So you see this grayed out. We call this a ghosted cycle, and we had looked for the market to peak somewhere out in here in the resistance and then come down. And our trough, our average trough where that low was expected, was around sometime in April, potentially early May. So we thought that the declining period would be sometime out in here, March, April. Now that is extended out based on the fact that these cycles have widened a little bit, and that takes it out to sometime in May. So you can see these blue lines. This is end of April right over there to the end of May. This is the timing range that we have for the trough. It could peak any time in here and then get into this period of risk for decline. All of these yellow areas are where periods of risk come in. Why are they called that? It's because the cycles, when you have an alignment of minor, intermediate, and even longer term cycles, that's where there's profit taking, liquidations, and the bigger cycles are the longer ones. They're the most dominant. Also, you can see that there's alignments of momentum conditions that change. So right over here, you could see negative momentum warned to us about a cycle peak, which was very accurate right there. Here's where you had positive momentum warning us about a cycle trough, and that was fantastic information. This is the Reversal Scout. It's unique to our website, and this tells us that upside momentum is still strong. There was a hanging man right over here, but those little signals have tended to not confirm. And as you could see, the market continued to move up. Now, these lines right over here, and let me just get a little closer look right here so that you can see that. These lines right over here are the resistances that come off of the monthly charts. There's the monthly resistance confluences right over here. This is the dominant fib 127 right there. And then you could see other extensions from the daily chart and from the weekly charts right in here. This is what we consider extremely thick and important resistance area. Now, our upside projections, as I said in the beginning of the show, were only to get up into these areas right over here around 2050 towards the end of the year. We thought right in this part of the year it would come down sooner, but AI and NVIDIA prevented that, and that it would go into the correction here and then move up again to higher levels here out in the fall. The timing has not changed, but the numbers have changed, because as this moves up, it moves up the support levels. And as it gave us the information that it's important to widen the cycles by a minimal amount, that then tells us that the trough is likely to come out here in this period, sometime in late April to late May. So we've extended that. Now, the corrective levels right over here are 48.76, which would be, only around a 4% correction. That is unrealistic. It's much more realistic that the declining numbers are down over here, 47.25 approximately, even getting down to this spot right over here at about 46.10. So 46.10 would be approximately a 10% correction. We're not really looking for that because we think the depth of the strength in there is too much. Also, this 34-week moving average, which is often a test, would take you up into this area of about 47.25. So 47.25 is much more around the 7% level of correction. And that's kind of what we're targeting here out into May. So our analysis has slightly changed because as it moves up, it raises targets, and it's widened out the cycles a little bit, so that tells us that it's likely to be, the trough is likely to be a little later. In other words, when the bottom of the correction comes. But the correction is likely to be out over here in March and April, and at sometimes it may look like it's falling very hard. So that's important. Also, our VIX analysis aligns up with that, which says that there's likely to be big increases in implied volatility during that period. Let's switch over to the daily chart, and you can see in here as we look at this that there are, let me just get a little tighter look right over here. This area up there of the resistances over 5,200, it has to get through some very tough resistances right now that I showed you on the weekly chart, and I'm showing you here now on the daily chart. So this level right over here again, just around 5,100. Which we got up to 51.11, as you can see, and then it started to get a little sloppier here today. This is 51.30, and this level right over here is 51.50, and that's really what we could see the upside getting to if the market does stay strong. The key support right over here is 49.20. And it really needs to break that to give us an indication that this weekly chart has turned over and it is in the correction here. That would be the important number. It didn't change from last week. What happened was, you can see it tried to get down here and break down, but it couldn't, as then the NVIDIA news came out and moved up. This is the slim ribbon PO on the bottom. This is a level 4 indicator. It is phenomenally good. And when it's green, it tells you that the slim ribbon is in a bullish configuration. Momentum is strong. And when those arrows come, it tells you it's warning of upside resumptions. When it's negative, and I can go way back over here where it's some time period where it's negative, well, you have to go pretty far back to see where it's negative. Oh, wow, I got to go all the way back over here. You can't even see that. So you can see that the value in here is that it tells you when the market is positive, it tells you when the market is negative, and you can see that the market has been quite positive through this whole period, the slim ribbon telling you that right in here. And it is now in the upper channel right there. Everything about this analysis has been positive. We have not been shy about that. No matter what I call for a topping in the market or where I show resistances, the important thing is understanding market condition. And that's what we show you all of the time, because we want to make sure that nobody is shorting in front of super strength that you have right over here, because we want to let the market tell us when that's happening. Now, we use some intraday information to help us with that also. So again, here's what we're looking at right over here as we look at the S&P 500 weekly and daily. Everything strong, momentum strong, all of the indicators strong, and no reason to be expecting anything other than upside until the market tells us differently about that. So now what I want to do is go over to the 2-hour information, and then I'm going to show you our indicators, and you'll be able to see the value of that. So this is a 2-hour chart in here, and this breaks down the daily chart into smaller pieces and the cycles in here. So what you see in the bottom are the cycle brackets, and then these lines are showing you the actual what we call configurations or translations in the cycles. You'll learn about that in our cycle analysis workshop. Now, if this is the ideal situation, if there were no upside and downside pressure, it looks like this. But when the upside pressures are bigger than the downside pressures, it looks like this, as you could see. So there's a lot of upside pressure that slants these to the upside. This is what the cycles look like with upside pressure on them, and this is the actual trading of the market. And you can see the cycles in here. These dark lines are where the daily cycle troughs came, and you can see that a daily cycle trough came right over here. That's on the daily chart. And that this cycle right over here is still rising as our projection. It's pretty obvious that when this corrects, and this looks like it's going to correct out into sometime next week. This is the 27th. This is the 28th. We would expect on the 27th or 28th a pullback to be complete in here. So it would come down right over here. Let's get a closer look. And you can see that. So we're going to look for a corrective period right over here and pull back sometime into next week, and then moving up again. And the question is, when will this then be giving us signals of the market moving down? Well, it would take a movement down that breaks that trend and a lower low, something like that, that then tells us on the 2-hour chart that there's a topping going on in the daily chart. So we're going to look at the 2-hour chart and the daily chart and be able to figure out when the market is actually telling us of a problem. Also, you can see we have the slim ribbon on here and the slim ribbon PO, and we're going to want to see those turn red in order to give us an indication that the market is turning weak. Right now, this is very clear. It is giving very clear upside signals in here as we look at it. And nothing is changing in there. Extremely positive. So that's the 2-hour cycle analysis, which is a breakdown and lives inside of this daily analysis, and this daily analysis lives inside of the weekly analysis, and that is a picture of what multiple time frame analysis looks like. Market still in great shape. It has not changed, And again, I'm going to repeat, no matter if I say that there's a peaking due or not, we look for the indications that it's actually happening. In the meantime, everything looking very strong. Part of what helps us get those indications is when we look at our market condition monitor. So this is our algorithms programmed into our application. So what I have on here right now, I'm looking at the short term, and let's just get a little closer look in here as we get this to scroll down here. Okay, so what we're looking at here is the S&P 500, the QQQ, the IWM, the diamonds right there. And you can see as I'm looking at the short-term reading right over here, which includes breakdown of weekly, daily, and 2-hour, that we have the conditions that have been bullish in the S&P 500. But now we've got a little bit changing in here as there's been some weakening on some of the indicators, and the QQQ is only slightly bullish. At the same time, the IWM, which is now showing weakness, and the 2 hours is turned to neutral. So we're getting some little warnings here on this short-term indicators right over here. If I want to look at the near term, which is really only giving weight to the daily 2 hour and 15 minute, you can see in here that there's some neutralization going on. So if you were a intraday trader, you'd want to be looking at that. But for people that look at weekly and daily, you're going to be really looking at this one on the short term. I want to go to the time frame mode right over here, and you can see the slim ribbon, and this is the 2 hour readings in here. And you can see that the IWM has really been turning weak. It's not giving you good readings at all right there, but the S&P 500 and the QQQ and the diamonds are all giving you strong intraday readings. You can go in here back to the daily chart, and you can see in here that QQQ is starting to give you some weakening right over there. And overall, it's still quite positive. I'm going to go back to the trader version because I want you to see that we're looking at in here that overall the market is still pretty good. But I'm going to look at some trade conditions right over here. And you can see in here as we scan this that you can see the ones that are in very bullish condition, looking at the short term. And you can see that when it starts to change, you'll start to get the 2 hours tipping over first. And these are all very bullish, as you can see there. So if you were trading, you could see NVIDIA there, very bullish. You would want to really see this information because you don't want to short anything that's very bullish. You don't want to buy anything that's very bearish. And you could see how many in here are very bullish as you look at that. Now, if I go back to the top and I go to the trade setup condition and I go to very bearish, again, on the short term, if you're a fairly active trader, you're going to be looking at the short term here. And you can see in here, it is really the golds that have been, or the metals that have been bad. Boeing, you look at that. That's one of the key stocks. That one is very bearish. It would have kept you from buying it under these very weak conditions. Corn, soybeans, there's the SIL, which is the silver miners. Roku, I mean, that one looks very bearish in there, and you can see that you would have stayed out of trouble. PayPal, that's an interesting one because Square is up huge today, but PayPal is not, and it didn't really follow it at all, and that's been a pretty bearish stock also. Deere, the banks, KRE, Shopify, these are stocks that have been bearish and the ones that, if you were a trader, you really would not want to be buying. So I kind of wanted to show you that, where you can see how you can really look at these conditions in here. Really valuable, I think. And looking at the stock market, you can see here that this is telling you that there is likely going to be a notification of change when these start to change, and we want to look at that. So I could be looking at the near term right over here and wait for those changes, and you can see that, well, on the intraday basis, they are weakening again. So maybe there's something changing in here, but I want to keep my eye on the short term. As I look at that, I want to keep my eye on that chart on the that I showed you, the intraday 2 hour chart. Those are really valuable. And overall, let's just, the summary of what I just showed you is the weekly and the daily and the 2 hour chart on the S&P 500 are all aligned positively. They've been bullish for a very long period of time, and our analysis has been in alignment with that. We are expecting the market will peak and go into a sizable correction that will likely take us into May. You could see all of those other indexes by becoming a level 1 member. You'll be able to see that in our SIR daily. So if you're interested in the other indexes, you will then be able to see those charts. Correction out there, but not yet. The market will tell us when. Please do subscribe. And if you become a level 3 or 4 member, you can have the MCM, the Market Condition Monitor. All right, that is it for today. I want to remind you to go to our website, explore, get acquainted, sign up for free with Snapshot Lite. If you're brand new, that's what you're going to want to do. Get our information every day. Subscribe to our channel. Click that notification bell. Like this video. Give it a thumbs up. And watch the member videos and the playlists and past shows. On X, follow us at AskSlim. And any information that you need on anything I showed you here, on our huge offerings of education and analysis, our membership, write to Matt at AskSlim.com. That's it. I want you to be so careful. It's so crazy out there. And I'm always wishing you great trading.